It's interesting that we just had in this region a decision, a surprise decision by the RBA, Reserve Bank of Australia, to keep rates on hold. The market was stunned by that because they were expecting a cut. Was it a similar situation for the Bank of Israel, and could they cut as early as August?
Good morning. For the Bank of Israel, this was less of a surprise decision. The consensus had them remain on hold at this meeting. I think there were very few dissenters or very few views outside the Bank of Israel that would have expected a cut. 4.5% was definitely what was expected here. That is against the background of the still quite increased uncertainty that the Bank of Israel is operating in here. This is, of course, a changed environment now after the conflict with Iran has ended, but it was not really expected that it would already make a decision to lower rates at this meeting. Could they possibly already move in the next one in August? It is in the cards, but again, I would think it's one more meeting where they will likely sit it out. The communication yesterday did not sound that they were about to cut. They sounded relatively cautious. They interpreted most of the developments in a relatively careful and cautious way, perhaps more so than was even warranted at times. So I would not expect a cut at this point before the September meeting.
This is essentially a war economy that Israel is on, and it's the leadership constantly describe the country as on a war footing. The Bank of Israel's research department cut the GDP growth forecast for this year to 3.5%, from 3.5% to 3.3%. Was that in line with your expectations, or is that perhaps understating the impact on the broader economy?
Indeed, I think it is possibly even a relatively upbeat forecast, given that we had a short but relatively intense conflict also on the Israeli territory, or at least one that was sufficient to lead to some pause in economic activity, hence taking down the forecast by a mere 0.2 percentage points to 3.3. Is still a relatively upbeat forecast in our view. It was expected that it had to come down. It has now been revised upwards for next year. That is probably both a bit of base effect from the revision downward this year, but also reflects an optimism that has now set in the aftermath of the round of conflict with Iran. Ultimately, this the way this conflict ended, or this round of the conflict ended, has removed significant threats to the Israeli security situation and economy, so it could provide a fair bit of investment and demand boost in general here.
How would you characterise the fiscal position given the pressure on defence spending? Again,
here I think we will see a wider fiscal deficit this year than was anticipated prior to this round of conflict. This is partly simply costs of rebuilding, though they will not necessarily be met by the central government budget, by a separate fund. There will have been higher military expenditures, fuels, ammunitions, and the likes. So it should be expected that this year's budget deficit is a little wider. At the same time, revenues keep flowing at a relatively good rate, a bit better than expected at the beginning of the year. So the overall deterioration in the deficit is probably limited. There's the exact magnitude will show up in the next few data points. It will be noticeable, but it does not look for now like this is a permanent deterioration. We already had factored in higher military spending anyway for years to come, but that has been known for the better part of a year now, that this was going to be the situation for many years forward.
Yes.
This latest round has not led to a further deterioration other than a short-term one in the fiscal picture.